Okay, everyone, welcome to the weekend edition for October 14th, 2023 for Stats Edge Trading with myself, Michael Nauss, Chartered Market Technician. As always, on Wednesdays, on the weekend, we slow things down. I got my Tim Hortons coffee here. We're going to zoom out. We're going to take a look at crypto, FX, underlying stocks, try to figure out what's going on in the world, try to figure out what we're going to do next week when it comes to our trades. Now, as always, make sure that you're signed up for the email watch list. You can do that at statsedgetrading.com, or you can go to Substack and just search for Michael Nauss CMT. I email out every night my thoughts on the market, a couple screenshots, access to this video, my watch list. It's all there. So take advantage, completely for free, not spamming you with anything. Just another way for me to contact you guys and a way to kind of grow my presence. So definitely sign up for that, and let's get started talking here about Bitcoin. So we're looking at a weekly chart. Always makes sense on the weekend. Zoom out. The weekly candle's closed. See what happened this week. When we're in the heat of the battle during the week, sometimes we get emotional and we think things are going crazy, and then you zoom out in the weekly chart and you go, oh, that wasn't really that big of a deal. The interesting weekly pattern here on Bitcoin, again, long story short with Bitcoin, we are stuck in this range until we are above here or we're below here. We're in this range, and there's really nothing else to be said from that. We're kind of hard stuck between this zone, and we have been now since March. So long time. Now, if we zoom in just at the candle pattern, we have a bit of an evening star pattern. We have a big push up, we got a doji, and then we got a push down. The reason that this candlestick pattern to me is very interesting is simply because when you have a big push up and then you have that doji candle, that doji candle represents indecision. Two sides of the market are fighting. Neither side can really make any headway. And then you have the down move showing that it could be potential more downside to come. That being said, a whole lot of doji candles going on in Bitcoin on the weekly time frame. So this is very much frustrating for anyone who's trying to pick short-term directions on this. I just don't know if we are in the world anymore at all where Bitcoin is going to take these wild swings. I don't know if we're there. I think it might be over. It's funny that people that are trading Bitcoin and the hardcore laser eye Bitcoin guys have always said, we need institutional involvement. We need institutional involvement. The problem is when you get institutional involvement, generally markets start to get really efficient and they slow down. The reason for that is if I am a mutual fund or a hedge fund and I have 1% of my portfolio allocated to Bitcoin, as Bitcoin moves up, I've got to be a seller because I have 1% allocated. As Bitcoin moves down, I need to be a buyer. And what happens is if you have enough of this, enough of these institutions doing this, then you have prices that move less because as things are moving up, they're sellers, that will push the price down. As things are moving down, they're buyers, that will push the price up. Could be that, they careful what you wish for kind of thing. We could be choppy for longer. And then what will happen is eventually this kind of being up or down 1,000 points will end up just being the norm. And that craziness before will end up just getting diluted away. And just the nature of trading Bitcoin changes where you're not really looking for massive swings one way or another. You're looking for a couple hundred to 1,000 points on any given week, and that just becomes the norm. Could happen. Who knows? Gold, very interesting here. Came all the way down, talked about this 200-week moving average down here. Also looking at this support zone right in this area. I didn't think it was going to bounce this hard, but just a massive push in gold. Retook this breakdown point without even stopping. It just, we zoom in on the daily chart, you can see, hit that. I did actually take a short off that zone. Covered half my position for a profit, got stopped out half for a loser. So it was a scratch of a trade just because it was such a clean support zone that we came back up to. And then the next day just rocketed through. So now we're back up to the 200-day moving average right here. I wouldn't be shocked to see a little bit of a rest or a pullback, but that's a nice looking kind of bear trap right in this area when it comes to gold. So we sucked in a lot of a lot of sellers in this area, right? People who were maybe had stop losses under this zone, people who are really betting for gold to fall apart here may have gotten kicked a bit. So we're going to watch gold going in. Again, I wouldn't, after a move like that, I wouldn't be shocked to see a little bit of a rest, but bias is flipped now in gold. I'm now going to be bullish gold. If we pull back, for example, and we hold this area or above this area from before the breakdown and then start pushing higher, that's great. That will end up just being a head and shoulders, an inverse head and shoulders pattern. Ideally, for me, because I want to buy near that level, that's what I'm interested here. I keep looking down. Again, for people who are new here, this is where I have all my notes. We generally move quicker during the week, but it's a Saturday afternoon. Again, I've got my Tim Hortons coffee. We're going to go through some long-term charts, so strap in. Euro, very interesting here. Continuing to battle this anchored VWAP from the lows. Just two bottoming tails, and then on Wednesday when I made the video, it was bouncing up, and then we reversed lower. So this is going to be the opposite of what the Dixie looks like, DXY, where it sold off a bit, probably from an anchored VWAP from this high right here. It's not drawing, that's fine. So sold off a little bit and is now reversing. So it's very, very possible that we could continue to move higher. And if we break this high on the DXY, which would correspond with this low on the euro, could be a nice flush. And then but I'm still to the point where things are just looking a little bit overdone here, and I wouldn't be shocked to see it bounce. Now, if you're bullish equities, this is one of the reasons where if you don't even watch currencies, make sure you look at the currency section, because quite often a move up in the dollar is a move down in stocks and vice versa, right? People are they buying dollars or are they buying stocks? And in this case, it looks like it might be selling stocks and buying dollars, which again will be bearish for this area. Speaking of euro, if we go to the euro pound, very interesting look here on euro pound, where we have potentially this cup and handle look. Now, euro pound, I like to trade, but note it is a trader, right? This is something that you want to buy and sell and buy and sell. Again, I trade Forex via prop. I trade equities via prop, and I have long-term stuff as well. So for when I'm looking at these long-term things, I'm not taking trades based off the weekly charts. I'm zooming in and I'm zooming in and I'm zooming in. So that's why we do daily charts throughout the week. And then even from the daily charts for stocks, I do 30-minute charts. And for Forex, I use hourly charts. But an interesting little cup and handle look here. Here's the cup, and then we just have the handle kind of looking something like this. So if we get a push up here on euro pound, maybe we target these highs. Even if we get back into this range, that'd be an interesting trade if we can nail it. Now, of all the currencies out there, Kiwi, I think that the kids call it today, or New Zealand dollar is looking the absolute worst, where it's been basing in this area. It didn't get nearly as much of a bounce as some of these, and it's looking right at lows here. So New Zealand dollar does look like this thing could get very, very bad very, very quickly here. So, if you're an Aussie, New Zealand dollar, maybe that's a trade that you want to take. You can trade the two of them. But of all the things I scan, New Zealand dollars look the worst. Now, dollar yen looks great, but again, I'm really, really concerned holding anything. The yen overnight, with them saying that they will defend the currency, makes me think it might be this zone that they defend that at. Okay, so that is it for currencies. Now let's get into equities and all of that. First of all, I want to show this screen more. So if you have access to Trade Ideas, we now have the web version. So you just go to tradeideas.com. Let's just pop that out. And this is the new website. If you just click on the Market Scope 360 up at the top here, it takes you to our new web version. And if you don't have Trade Ideas, again, just go to statsedgetrading.com and you can sign in and start playing with delayed data for free. But what I end up doing, what I love, is under this top list section right here, we have these heat maps. And if I bring this one in, this is the change from the close from the from Friday, and this is all of the sectors. This is a big sector watch, right? So I rotate these out myself. It happens for everybody, so you don't have to do any tweaking. It's all just right here. But of what's going on at that time. So you see that XLK and XLY, so XLY is consumer discretionary and XLK is tech. These things look weak. And if I bring up these charts, right, we have this big topping tail here in technology. And then at XLY, we have this big topping tail in consumer discretionary, and we're hurting at that level like this. Let me just bring this in so I can show you guys what I'm looking at. But this looks pretty bearish, right, in this area where we failed at this zone really, really hard. These 3 candles in a row are not looking good, right? There's no solid move one way or the other, and the last move is down. It makes me a little bit worried for consumer discretionary and a little bit worried for tech. Now, the ones that are up this week are energy is certainly one of them. Gold, we talked about as well, right? Gold being in the other section. But energy was down 4 or 5 weeks in a row and then bounced. A little bit of an oversold bounce there on gold. XLU was a massive, massive sell, and then a bounce there on XLU. Sorry, I see my face in the way. I'll pop over there. So a bounce there on XLU, and then we have XLP, which was down quite a bit and is bouncing this week. So all of the things that moved up or were bouncing, at least most of them this week, to me, were incredibly oversold bounces. If you see the lagging industries pushing higher, that's not as interesting to me as seeing the leading industries start to push higher, right? I want to see the guys... I want to see everything move higher, right? I don't want to see the ones that were leading do nothing and the ones that were lagging bounce, because to me, that's just seeming kind of like a short covering bounce. I would like to see more of a move there. So that's what I noticed when I looked at the sectors. And then just looking at the S&P 500 right here with the SPY, it's the same type of look. We have, oh, good, that's fixed. Good. So we have this, where we have the breakdown point right here. We came up to it, and then we failed this week. That's like the tweet that I put out. Again, Michael Nauss, CMT on Twitter. It's not what you'd want to see. You'd want to see it reclaim that zone and start to push higher. Now, it doesn't mean that it won't next week, but just some things that make me a little bit cautious on equities going into next week. So I did add some long watches, some long stocks. Again, if you have trade ideas and you have the email subscription at the bottom of the email, you can just copy and paste that link that I put in there into your trade ideas, and you'll be watching the same things that I am and have all the levels that I'm interested in as well. But let's take a look at DVAX. DVAX. No? Okay. DocGo. Sorry. I don't know where I got DocGo. Let's just refresh here. I think I broke something. Yes, I did. There we go. So DVAX. This one's very interesting. If you look at the long-term picture, we have this zone that it's been fighting for a long time. This kind of $14 to $15. It's pulled back to that 14. Showed up on an anchored VWAP scan. If you anchor a VWAP from this significant low right here, that's right above. So we have a lot going on at 14. If we can get a bounce from there, I'm very interested to pick some up at that level. DocGo was the other one. DocGo. This is, if I do try to get a change in trend, which I don't do very often, but 12% short flowed, and again, it did show up an anchored VWAP scan. This is how I'm doing it. This is one play that I have in my playbook where you take the very low of the stock, you anchor a VWAP from there, and you just draw that line out. And as long as it holds that, you know you have an area where, okay, you know, trends happen like this. So DocGo may be an uptrend and then a pullback. And then if it gets some continuation, then my buy point right here will be great, because this thing could work its way back up to even $8 before it's where it broke down from. So that's something that I'm watching on this guy right here. We also have Yelp, which I haven't heard anyone use in a very long time, but It's showing up on the scan as just something that's getting very, very tight here at highs. This has been a nice uptrend for Yelp. I don't know where this is coming from because I don't know anyone that uses Yelp anymore, but it's just getting very, very tight in here. So if it can get above this area, I like a look of that, and then I know I'm wrong right here. And that's, for me, with trading, it's all about where am I wrong, where can I move on with my life and deploy my money somewhere else. RELY, we are actually already in RELY from right here. And the reason for that was if you anchored a VWAP from before this gap, it showed up in these anchored VWAP scans that we have at Trade Ideas. It looks something like this. So we have this area that I bought off of, sold a bit into highs and still own some. But you can see it's pulled back and it's held this level right here. And now it looks like it might be starting to move higher. So I may add back in over these kind of 3-day highs. I may add back in what I took out, see if I can get a big run in this RELY. Last thing I'm watching here is UEC. And then UEC, just a nice base here. Uranium has been on fire recently, pulled back, but this one's been holding strong, has an 11% short float. And you guys know, I say this all the time. If you're looking for something with a heavy short float, don't look at stocks like AMC that have actually absolutely been killed, because the shorts are winning on that. The shorts are not nervous in any way, shape, or form if they're short something and that stock's going down. However, if they're short something and the stock is going up, that's where they're nervous at it. So this is one of those things where it has a pretty good short float and it looks like it may be moving higher. So that's where I'm interested in this name. Okay, everyone. Thanks for coming by. Things are messy right now was kind of the closing comments, I think, about the markets. Everything's messy. Bitcoin's messy in the middle of the range. We had a pretty decent failure from that breakout area that I showed you in the SPY, but we're still holding 420 from the lows. So the SPY is a little bit messy. So you have Bitcoin that's messy. You have the currencies that are messy. You have the SPY that's messy. For me, that means I reduce my size. I am more interested in pullbacks than breakouts, and I understand what environment I'm in. So if I take a trade and that trade works pretty well right away, then I'm going to take some off the table, right? And that's what I'm doing when it comes to these things, is how quickly can I take some off the table, move a stop to break even, because I expect things to break out and go and then come back, and then break out and go and come back. So you need to adjust yourself, just be calm and know that eventually the market will make up its mind. And that's when we'll hit it real hard and hopefully do well. But for now, it's really just about kind of getting by, staying engaged, not risking too much, having positions so that if we're right and the market makes a move, that's when we hold some of those. So thanks everyone for coming up. Sign up for the email list. Do all the liking and retweeting and commenting. The algorithms really, really like that. I'll talk to you guys next week, and get away from the screens.